Welcome to Sophia Market Brief. I'm Sophia Carter. Every quarter, something happens on Wall Street that most individual investors either ignore or misunderstand. Today is one of those days. $4 trillion in positions are being reset across global markets. Not lost, not gained, reset. The board is being redrawn, and in markets, the moments when the board is redrawn are exactly the moments that separate informed investors from reactive ones. This is Quadruple Witching Day, and today I'm going to show you exactly what it means and why it matters more this quarter than it has in a long time. Let me explain what's actually happening today, because most coverage of this event either oversimplifies it or skips past it entirely. 4 times a year, March, June, September, and December, something called Quadruple Witching hits Wall Street. Stock options, index futures, they all expire on the same day. When that happens, large institutions are all forced to act at the same time. Some are closing trades, some are rolling positions forward, others are rebalancing entire portfolios. All of this happens in a compressed window. The result? Trading volume surges. Price moves become harder to read, volatility increases. But here's the important distinction. This volatility is not driven by new information. It's not driven by earnings. It's not driven by geopolitics. It's driven by mechanics, by the calendar, by contracts expiring. That distinction matters because it changes how you should interpret what you see today. It's not just what happens today, it's what happens after. Because once these large positions are adjusted, the mechanical pressure clears. And that's when the market's true direction becomes visible. Today is the noise. What follows is the signal. Now let's put today in context, because context is everything. 1 year ago, markets faced real uncertainty too: trade wars, tariffs, volatility. But here's what actually happened. By the end of 2025, every major market finished positive. The foundation felt difficult, but it held. Today, that backdrop looks completely different. We have an active conflict in the Middle East. Oil prices have surged sharply, driven by supply disruptions and ongoing geopolitical uncertainty. Energy costs are rising, inflation pressures are returning, and central banks have less room to respond than they did before. At the same time, market sentiment has deteriorated. The Fear and Greed Index is sitting at 23, extreme fear. Investors are cautious, reactive, and in many cases, paralyzed. So today's Quadruple Witching is not arriving into calm waters. It's arriving into a market already under pressure. That combination, large-scale position resets on top of existing uncertainty, is exactly what amplifies volatility. But here's the key point. Confusion does not always mean risk. Volatility does not always mean danger. For those who understand what's happening beneath the surface, this is where opportunity begins. So let's look beneath the surface, because this is where the analysis gets interesting. Historically, Quadruple Witching days themselves tend to be noisy, but not directional. The price moves you see today are largely mechanical. They reflect positioning adjustments, not new conviction about where markets are headed. The real signal, the meaningful directional move, doesn't come from the day itself. It comes from what follows. In 2025, markets were relatively quiet on every single Quadruple Witching day. The meaningful moves, both to the upside and the downside, emerged in the 1 to 3 weeks after the institutional repositioning was complete, after the noise cleared, after the mechanics were done. That tells us something important about how to read today. The volatility you see right now is not random. It is the predictable result of a known, calendar-driven event. Large players are adjusting positions, not making new directional bets based on their view of the world. Which means the question you should be asking today is not, what does this price move mean? The question is, what does the market look like once this mechanical pressure clears? Because that's when you'll see institutional money reveal its real hand. Are they rotating back in? Or are they stepping back further? When markets price in maximum uncertainty, they often overshoot to the downside. Prices move not because of fundamentals, but because of forced selling or mechanical rebalancing. For the uninformed investor, those moves look like signals. They react. They make decisions based on noise. For the informed investor, those moves are something else entirely. They are data points. And sometimes, they are opportunities. So what does this mean practically? For you, the individual investor navigating today? 3 things worth keeping in mind. First, separate the noise from the signal. Today's price action will be heavily influenced by derivatives mechanics. Moves that look significant in the moment may carry very little fundamental meaning by next week. Before reacting to any price move today, ask yourself one question. Is this driven by new information? Or is it driven by contract expiration mechanics? The answer to that question changes everything about how you should respond. Second, the window that matters most is what comes next. Not today, not tomorrow. The days and weeks following quadruple witching historically provide far cleaner signals than the day itself. Watch how markets behave once the mechanical pressure clears. That's when you'll see whether institutional capital is rotating back in or continuing to step back. That's the signal, not today's intraday moves. Third, understand the difference between uncertainty and danger. Right now, multiple macro pressures are converging simultaneously. Geopolitical risk, central bank policy uncertainty, energy price pressure. That creates a difficult environment to read. But difficult to read is not the same as dangerous. The investors who navigate moments like this most effectively are not the ones who predict correctly. They are the ones who stay informed, stay analytical, and don't let short-term noise override long-term clarity. I'm not here to tell you what to buy or sell. I'm here to make sure that when you sit down to make a decision, it's grounded in analysis, not emotion. Because the markets will always be complex, the news will always be noisy, and the pressure to react will always be there. The edge is understanding. Quadruple witching comes 4 times a year. Every time, it feels significant. Every time, the headlines make it sound like something extraordinary is happening. And every time, what separates the investors who navigate it well from those who don't isn't prediction. It's understanding. The board is resetting today. And now, you know what that means. Stay rational, stay analytical, stay ahead. This isn't news, this is your money. I'm Sophia Carter. See you next time.